Hey, this is Rick with Hit and Run Candlesticks. How you doing? Hey, we're about to look at some charts and targets for this Monday. Make sure you check below in the chat area, comment area for any specials and deals we have going on. Remember, we still have our what is it? Our trial, $49 for 30 days. So check in comments, okay? All right, let's get started on some of these charts and targets. All right, recorder is running. Hey, good morning, Bill. All right, good morning, everyone. This is Rick. I want to welcome everybody. Today's date is Monday, September 9th, 2024. A great big reminder, we've changed our public e-learning from Tuesday to Mondays. It is tonight, Monday, 8 p.m. Eastern in the free public room, okay? Check your email. Please check your email for login instructions. Yeah, okay, so make sure you do that, all right? So it looks like we're getting a little bit of a bounce this morning. Here's the SPY. We're getting a little bit of a bounce. But what I would like to do is go to this chart. And I think it's very important that we respect the trend. I don't plan to be, jumping and hopping today. I want the market to give me some good direction. And the direction is good right now, to tell you the truth. Direction is down. So what I'm looking at is this right here. We've got price below the T line, and the T line is actually below the trend indicator right now. The trend is down. So I want to respect that. I don't particularly want to fight that. But we all know that there's long charts that can be had, and we're going to look at a couple of today that I've got on the watch list. I spent last night and a little bit this morning putting together a watch list. And the watch list is merely charts that I put in a special scanner window, and then I allow that scanner to work. And if charts start popping up, bubbling up to the top side, or bubbling down to the short side, that's what I'm going to look at to trade. But I think we all know that if we trade in the direction of the market, we're likely, the probabilities are that your money will be made quicker and much easier. So keep that in mind. Thanks, everyone, for coming back on that sound and screen issue. Okay, so again, I think it's very important to respect what the trend is. Here's the SPY right now. You can see we're opening up. It looks like we're going to open up about 543.55 here, but it doesn't change that trend. If we take a look at the Qs, we respect the trend. Price is below the T line. T line is below the trend indicator. It looks like we're going to open up somewhere in the neighborhood of 402.05, 452.05, but it doesn't change that trend moving up. So be careful, if you're trying to catch something moving up. The overall trend is still down. Let's come over here now to this chart, and I want to take a look at UVXY. UVXY is pointing out that there's a little bit of fear in this market. You can see last week we had the fear. And let me get my right one out. There we go. So what we did is we ended up last week posting a pretty nice bullish candle here. We had a couple of days of a resting pullback, and then we ended up with a bullish engulf. And now today we have an inside day. But what's most important to me is what the trend is doing. And right now the trend, if you look at the trend, very short-term trend here, but it's there. We've got price above the T line and T line above the trend indicator. This suggests that the bears have the edge at the moment, okay? The bears have the edge. If we take a look at T1, T21.23, 60-minute, how the dots have turned from green to red, that's another sign that the bears or the sellers have the edge. So be very careful trying to beat the market, or even be in this market at this moment. This could be one of those times. And you guys, probably hear me say that a whole lot. But trading really is not about banging your pots and pans every single day, every single hour. It is not. It's about making good, informed, quality trading decisions. So you want to put as much as possible in your favor. All right, let's take a look at a couple of charts here. Here's a long one. And again, these are just charts that I've got set up just on the watch list. Doesn't mean they're a buy right now. Doesn't mean they're a buy tomorrow. These are charts that just set up in a chart pattern that I like to look at. A-firm is one of those. And right now, we've got this move up, this move back. We're in a 3-8 trap right now. This red area would be a buy or a danger area. And then, of course, a breakout would be a buy area in here. And if it gets to moving, if the bulls come in, then I'll be looking for around 52 up here for a target. And that's about 29% away from that, 40, 35 area right in here. But I'm going to wait for that, patiently wait for that bullish candlestick signal, and maybe even a little confirmation. What will determine that is how the overall market is doing. The Qs is still short. With this big ugly candle Friday, anything inside this red box area is just a whole lot of noise and nonsense. It's just yak, 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 yak. That's all it is. What we need to see is one of two things happen. One, break down through for a continued bear move to the downside, or a rally up to possibly put a bullish move in. If we start moving up, all we're going to really do is run into a great big headache. So the Qs have a ton of proof to do if they get up here. Then they need to get up here and actually break out. It may not be in one big pop. We may pull back and then break out. But the last thing on earth we want, if we get bullish, is to come up, roll over, and then fail. That just adds one more leg to the downside on the Qs. Again, currently, the sellers have the market here. What's this one here? Here's a ZEUS I've added to the watch list for a short. The stop area, and I've got a stop area because every individual is a little bit different. Somebody that has $1 million account just might put a stop in a different place than somebody that has a $5,000 account. Somebody that has $1 million account has a little more leeway. They're willing to sit through it a little longer. They're willing to be a little bit more patient. And sometimes people with a $5,000 account, you can't do that because you can't take those losses. You've got to be spot on more times than not. And this is why it's so important to trade in a market that has your back. A market that is not choppy or confused. A market that is smooth and trending bullishly or bearishly, it doesn't matter. But it's got to be smooth. Right now, I'm not sure this market is smooth. Anyway, this ZEUS is setting up short. We've got a nice 3-8 trap. I'm looking at a target about 32.75 down there. About a 15% move inside the green box. And then up into this here, that red box, that would be the stop area where somebody may choose to put that stop. Airbnb, this is another one. Here we are in the buy area and stop area right now. 3-8 trap. Looks like I've got a, we'll call it 104 target and then 86.40 target, just rounding those numbers up a little bit. So Airbnb, we're setting up still to the downside. Trend is still down. No buyers in sight and a nice bearish 3-8 trap setting up here. We also, in this chart, if you look at the last several candles here, we have a nice little box setting up, pop out of the box. I think I just saw a note that Ed posted. Doug is doing public e-learning tonight, and I think I saw where his topic is going to be pop out of the box, if I'm not mistaken. So that would be a great thing for everybody to come to tonight and learn more about pop out of the boxes. Here's a nice rounded bottom breakout long setting up, American Airlines. And if I'm not mistaken, there was a few members here in Hit and Run Candlesticks that is already in this one. It looks great. Nice rounded bottom breakout. This red band here, this would be the stop area. First target area is up here at the dotted deuce, and that's about 12, 11 to 13%. Mike, you're in it? Nice. Great looking rounded bottom breakout here. So this one looks terrific. Make sure you keep those stops on. Oracle, I closed the majority of my Oracle Friday. A very nice profit up here at the high. It ended up kind of a rotten candle overall Friday, so I'm very glad that I closed it out for a very nice profit. I'm looking to buy it again when I see buyers step in. Down in here is going to be my stop area, say, if we just split the middle, 139.10, somewhere in that area. I'm going to be using the trend indicator and our magenta trend line down here. I may buy it if it breaks out. I can't say exactly where I'm going to buy it because I buy based on what the candlesticks are doing, not guessing what they're going to do. I'm guessing what they are doing. I'm using what they are doing to predict what the chart might do in the very near term. So Oracle is back on my list to add to it. PLTR, talking about a beautiful chart here. Absolutely beautiful chart here. Great little, if you look at these candles right here, if you step out of the books for a moment in the world of candlesticks, I know that is not a so-called book perfect Morningstar signal, but it is the same doggone thing. And we've got this, what I'm going to call a Morningstar signal here with two small body candles, a great breakout Friday, and we're holding up very nice here today. Targets are still that 34.65 and then 37.60 up there. And then I have a bigger target up here around 44.65. We've talked about PLTR several times over the past couple weeks. Great looking chart. PAO. PAO is one I added to the watch list because it's doing what we want, except it's not giving us a buy signal yet. I like the way it's run up. I like the pullback. I can see how it might work here, but we need that buy signal in there. And if we get that buy signal, might be a buy for somebody. Your risk is inside that red box where you might put your stop, either the top of it, the bottom of it, or in the middle. And then I'm looking for about a 10% move up to 780, 790 up here. Pepsi. That's a nice chart on Pepsi. Look at that. Great looking Morningstar. Notice the trend. Notice the trend. Great looking Morningstar. We popped up for a couple of days. We pulled back. We are in the buy zone right now, as well as follow through. Not only is this the buy zone, but it would be the stop zone as well. This makes for a super low risk trade right here. Super low risk trade. And a nice little move up to 189. We'll call it 190. About a 6.5% to 7% move on that chart right there. Gilead. We're right in that buy zone. We just need the buyers. We need the candle to tell us that is correct. And all I'm looking for are charts that have pulled back within my trading circle. Trading circle is going to be the trend indicator and the T-line area. And that's exactly where we are right now. But we need the buyers to come in. We don't want to guess. We don't want to say, well, hell, I'm going to buy some Gilead right now. Why? There is no earthly reason why we would want to jump out and buy Gilead right this second. You don't have the buyers in there. We need to see those buyers, and what they may look like is this. When we see that, now we can look at buyers. Because the market is very undecided right now, very, very choppy, kind of wishy-washy, more to the bear side, yes, but very wishy-washy. You might even want to wait till follow through. Okay, might even want to wait to some follow through. Let's see here. This AAPD, if you want to short Apple, there we go. If you're looking to short Apple, which if we break down through that red trend line, that just might be a nice little short on Apple. And then we'll look for it to come down to the dotted deuce down here. But that's a $220 stock. So you may not want to short it. You may not like to short. It's just too expensive maybe. That's okay. Give this AAPD a shot. This is the inverse ETF for that Apple. So look how that's setting up. We have that Morningstar signal, that follow through. We banged our head against that 50 period moving average. Now we're just moving sideways, a nice bullish engulf, and we're holding an inside date today. So a little 5, maybe 6% move up to the first target here, about that 1830. Your risk area is down here at the bottom inside that red band. Okay, so there's definitely some charts out there to take a look at, both long and short. The most important thing is to make good quality decisions based on a good quality chart. Okay, good quality decisions on a good quality chart. If you don't have a good quality chart, it doesn't matter whether it's long or short, well, you really can't make a good quality decision. All right. I want to thank everybody for being here. Remember, we have public e-learning tonight, new night on Monday, 8 p.m. Eastern. I'll see everybody at the bottom of the hour when the market opens up. All right. Thanks a lot for being here. Appreciate it.